Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 7th of February. Starting off with the FTSE 100, where we're consolidating near the highs. Support recently around the 7,800 level, which is great, and looking towards progress within that rising trend channel from the autumn. Currently pointing towards 8,050, which will obviously be quite a big deal given the doom and gloom in the real world. Obviously looking for an end of day close through 7,900 really again to finesse the recent gains on this market. Support below 7,800 at 7,730, which we've talked about before, and then if we get really bearish, then it's 7,630 at the 50-day moving average. But with the 50 and 200-day lines both rising, we're not expecting much of a pullback, despite what the doubters might say. On to the DAX, and here consolidating near the highs at the old peak last month around 15,300, and we're trying to bounce off that, which is very welcome. We had a gap to the upside as well. The top of the gap there at 15,222, which obviously could provide support. Below that 14,900, and then below that 14,700 in the 50-day moving average area. If we break higher, then the big prize would be 16,000 by the end of this month, which is a resistance line projection from back in September. On to the Dow, which has recently been sandwiched in a little range between the 50-day moving average, 33,700, and that line of resistance from the spring, 34,300, looking for a break either way. Hopefully with the RSI above 50, still just above 50, we're looking for a break to the upside. We get that, Powell permitting, then we could head as high as 36,000 by the end of next month. I suppose this month we're just hoping for 35,000 or so, which is basically 2022 resistance. On to Bitcoin, where we've been hoping that there'd be a new leg to the upside. Finding support here above 23,000 at the moment. There is support down at 22,000, which was the initial January resistance. And if you look closely at the 50 and 200-day moving averages, you see a golden cross there, or just about a golden cross, and see if the 200-day line is rising. But we have had the 50 and 200-day moving averages rising, and the golden cross today is most welcome. We want to see a clearance really of 25,000 to give us the $30,000 prize, which would be the top of that broadening June triangle. At the moment, the worst case is probably a return down to the 20,000 area where the 50 and 200-day moving averages currently lie. On to the stocks, and quite a bumper selection. First one is AFC, which I've been dithering in terms of covering over the last few days. Just wanted to see it clear the 200-day moving average. That's around there at 24 pence. We haven't been above the 200-day line properly since the end of 2021, so it's quite a big deal that we've broken back above it. And the current view is that at least while we're above that old September resistance at 26.5, looking for at least the top of that rising trend channel from the spring up to 40 pence by the end of this month. So looking pretty decent there for AFC at the moment, even though the stock is now quite overbought. On to Argo blockchain, where there's lots of people trying to will the shares down, but here we're always trying to will the shares up, just because lots of people are probably in the stock at higher levels. We've got a little breakout here with a gap as well, which is pretty significant. The old high there around 17.6 pence, so an end of day close above that with a gap higher could mean that the rather optimistic sounding target towards 30 pence could be on its way by the end of next month. So fingers crossed on that. Stop loss back below 15 pence should just about cover it. And obviously the confidence today from that as yet unfilled gap to the upside. We already had a bear trap island reversal, remember, back in December. Very, very strong configuration on a technical perspective. The gap higher today just adds fuel to the particular fire that setup brought. On to Alchemy, which has had MOU announcement today. Here we've broken that line of resistance from December, found support at it around the £2.40 level, above 240, looking for a break of the upper twos, so 280 to 300, leading to 360 or 370 by the end of next month. The good sign there is that we bounced off RSI 50 and we've got a rising 50-day and indeed 200-day moving average. We had a golden cross back in November, so the shares have made good on that. Stock which I've also been avoiding to just make sure that it's ready to head higher is Botswana Diamonds. Here we've broken out of this falling wedge from April, broken through the 200-day moving average of 0.92, and above that looking for as high as 1.25 at the top of a broadening triangle from the end of February last year. Maybe we'll hit that by the end of next month while we hold above the 0.9 area. Big news today in terms of stake building at Bison, where I've heard good things about the company in terms of the management previously, but the shares are now catching up with that. We had a gap, as yet unfilled gap to the upside last month, so the support there at 2.4 pence, rising 50 and 200-day moving averages, which makes one confident enough to say that we could hit the top of a broadening triangle from back this time last year, as high as 4 pence by the end of next month. Might take a bit longer than that, but by the end of next month should be baked in. On to the hottest of the lithium plays at the moment, maybe apart from Alchemy, CleanTech lithium. Here we're heading towards, well, we've got a new high there above 63 pence. Above that, on an end of day close basis, looking for 80 pence at the top of that rising trend channel from back in August, and hopefully we'll see that well before the end of this month. So looking pretty decent there at CleanTech. Stock which has not exactly covered itself in glory over the last couple of years is Chill, but we're up nearly 10% today. Nice strong candle with sideways shuffle along the 50-day moving average, and that's now starting to tick higher. That tends to be a good sign after that double bear trap that we had in December, January below the September support there at 2 pence. So above 2 pence, looking for 3 pence at the top of that broadening triangle from September. And maybe we'll see that by the end of next month, or maybe a little bit sooner than that. Caerus also back on the bullish front with the break of that resistance line there from June, and the 50-day moving average around 5 pence, above 5 pence, looking for as high as 10 pence over the next 1 to 2 months, maybe by the end of next month. The key here is, though, that we break above the 200-day moving average at 6 pence or 6.1 pence. And if you're cautious on the shares, maybe you wait for that before targeting 10 pence for Caerus. We've also got a bullish divergence line there, bear trap in September, October, but the RSI traded higher. And so really, from the time we broke above the 50-day moving average at 3.6 pence, we've been on an improving trajectory at Caerus rather. On to DeepVerge, where perhaps a bit disappointing that the shares didn't fly more than they have after that announcement of a 10 million euro deal, I believe. Here we were looking yesterday for the shares to break above the 50-day moving average. That was at around 1.8 pence. They did that today with a gap, so the gap through the 50-day line encouraging. That suggests, well, obviously we've already hit or retested the 2 pence or 2.1 pence target that we had initially. End of day close above 2.1 pence, and we could be looking as high as the 4 pence area at the top of that broadening triangle from the early part of last year. But let's see if we can get through 2.1 pence, as that seems to be a bit of a sticking point at the moment. Greatland Gold finally starting to budge as well. That's been very frustrating and irritating, one would say. We've broken above that line, that resistance line there from October. That was around 8.8 pence, and above that looking for at least 10, and hopefully much more over coming weeks. 10 pence area the key there, because above that we could then head up to 13 or 14 later in the spring. Looking on to the next stock here, which I interviewed I think earlier in the week, and that's Kendrick, up by nearly a quarter, which is quite satisfying. Here we had a bear trap really below the 0.9 pence level, and broken above the 50-day line at 1.02 pence, above the 50-day line, looking for as high as 1.5 pence by the end of this month, perhaps, given the way things are going. Next situation is one that I think I covered yesterday, but can't remember that far back. Here we broke a line of resistance there on the Microsaic chart. That was around the 0.04 pence level. We're looking for 0.08 by the end of next month, if the shares follow through on their extended bear trap below the 0.04 pence level. We're also looking at the 50-day moving average gradually starting to rise, so that is a positive. Good update from SmartSpace, which had great results today. Gap higher through the, well, gap higher above the 50-day moving average, and we're just trying to break the 200-day line. End of day close or a weekly close above the 200-day line at 48 pence, so we'll be heading up to 75 pence as soon as the end of next month. Just a couple of stocks to go now. First one is Tomco, where we're gingerly trying to break back above the 200-day moving average. The key here, I suppose, is the fact that we had an end of day close above the floor of that gap down in November, 0.39. Above 0.39, aggressive traders will already be looking for 0.65, and I know there are a lot of fans in this stock. Otherwise, you wait for an end of day close or weekly close back above the 200-day moving average or the top of that gap at 0.44 before deciding that 0.65 was on its way. Finishing off with Zinc Media, another stock which is gapped up today, gapped up through the 50-day moving average and off the floor of that rising trend channel from this time last year. The longer we stay above the 50-day line and the top of the gap today at 87 pence, the greater the chance of a move up to £1.25 over the next 1 to 2 months. Ideally, we break through the 200-day moving average over the next week or so. That's it for me today. More updates tomorrow.